Welcome to this video. In this video, I'm going to be doing a stock analysis of Dragonfly Energy Holdings Corporation. Now, as you can see, recently we've had quite an upturn, as you can see right up here. As you can see, we're trading below $0.50 for quite a while. Now, you should note something that recently, as you can see right here, we had a reverse split back in November of last year, where if you had 9 shares, you would now only have 1. This is quite a bad signal because this often means that the stock price is too low to be on the stock exchange, therefore you need to do a reverse split. Now, with that being said, currently it has taken quite a nice upturn, as you can see right here. We even peaked all the way up here in 2.27, and for the day as well, we're up by almost 15%. And the reason why it has exploded so much recently is because, of course, Dragonfly makes batteries, and they have entered a partnership with Packard, and they own Peterbilt, Kenworth, and DAF. Now, that is quite interesting, and I'll get into that later. Now, if we take a broader look at the stock, as you can see, if we make each candle a day, as you can see, it isn't that old of a stock. It was first publicly traded back in 2021, and as you can see, it has just been a ride downwards ever since then. Now, luckily, we only see one reverse stocks, but sometimes in small companies like this, we see them quite often. But here, we only see this one time last year in November. Now, let me make each candle an hour again. Overall, recently, as you can see, we have also seen quite a lot more volume, as you can see down here. This is the volume. These small red and green candles, that is the volume, that is how many shares are being traded. And as you can see down here, there's barely any at all, but then recently we did see a huge uptick in them. Now the market cap of this is quite small, at 106 million, meaning that it is a very small company, which means less money is needed to push it upwards or downwards, so be very careful in companies that are this small. Now the beta in this is 2.27, which means it is 224% more volatile than the average index. Now earnings, as you can see here, they're estimating to make more and more money or lose less and less money, which is of course nice to see. Now they don't pay out any dividends at all, and that's because of course they don't make any money, as you can see down here. Now how do they make their money? As you can see right here, that is on original equipment manufacturer and direct to consumers and others. Now others, I haven't been able to figure out exactly what that says, but as you can see, it is quite a small percentage. But direct to consumers, that is just batteries, and original equipment manufacturers also batteries, but they have two different distinctions. Now, if you look at the overview, you should note they have a ton of debt, as you can see right here. $65 million worth of debt is quite a lot for such a small market cap company, also because it rose quite heavily in stock price recently, which is the reason why it is worth so much. Now, they don't have that much cash on hand, which of course is a problem, as they do have 144 employees. So they either need to increase their debt or increase their cash, and they could do this by making new shares, of course. Now, as well, if you look at the PS and PE earnings, as you can see, we had a PE back in 2021 because they actually made some money back then. Then we did see some very high PS ratio, price to sales, that is, and currently they are quite low because they don't even make that many sales. Now, if you look at which countries they're in, as you can see, they're in the United States primarily. Now, back to the Packard partnership. Why do I think that's interesting? That is because Packard has a partnership with Aurora Innovations. That is this company, and they are making autonomous trucks. So if they can get those trucks electric and autonomous, it's going to be quite interesting, because currently Aurora Innovation only drives between Houston, Dallas, and Austin. So if they can make an electronic truck that can only drive between those three cities, it's going to be an insane partnership between those three companies. And I do believe that Dragonfly could be very huge in this endeavor if they can manage to execute it properly. Now, if we look at technicals for the day, as you can see, it's a strong buy, and for the month, it is a neutral. Now, the reason for the neutral is we did see this huge spike in price, but ever since then, it has fallen down quite a bit. Now, of course, we are up, 15% today, as I said earlier. So overall, it would be nice to see it trading a bit more sideways, but I would be very careful owning this stock. Now, if we look at the analyst rating on it, as you can see, we have two strong buys, which both has the same price, which would be $1. But because it has risen so much recently, of course, that is 20% below where we are at currently. Now their EPS, they're actually estimating to be positive in 2028, which is going to be interesting to see. And they're estimating to reduce their loss per share by almost $1 next year, and then basically the same the year after. Now, if you look at annual earnings as well, as you can see, they're estimating to make more and more money. Of course, this is slowly but surely. But it is a battery company, and if they can make some solid batteries, of course, that's going to be quite interesting to see. Also, given the fact they have partnerships. That was my video on Dragonfly Energy. If you like this video, please don't forget to leave a like and subscribe. And if you want to see more videos like this, please leave the company comments analyzed in the comment section below.